And so this dives into Wright's law, which is really at the crux of all of our electric vehicle modeling and all of our cost decline work. And so Wright's law, as I stated earlier, states that for every cumulative doubling of production, here measured by kilowatt hours, you get a fixed percent cost decline. And for batteries, that's 28%.
In this video, ARK Invest lays it all on the line with some extremely bold predictions about EV adoption and cost declines that fly in the face of these so-called expert predictions. And a quick announcement, I'm now offering exclusive, yes, exclusive, subscriber-only content over on Twitter. You won't find this stuff anywhere else, not on Patreon, not on YouTube, and no, nothing will change about my existing cadence on YouTube or Patreon. I'll still be posting daily videos here on YouTube. I'll still be posting loads of exclusive content over on Patreon. This is in addition. If you'd like to sign up, you can head over to my Twitter profile at Stephen Mark Ryan, click the subscribe button. And if you don't see the subscribe button, you're probably on an Apple device. Just log into the desktop browser, and by the way, it's probably worth doing that anyway. Otherwise, Apple's going to take a 30% cut. Don't know if you're paying more or I get less, not sure which. Still early days, but just wanted to put that out there now. I've already begun posting exclusive content to my Twitter subscribers, and we're just getting started.
Hi, everyone. My name is Sam Kors, and I'm ARK's Director of Research for Autonomous Technology and Robotics. And today, we're going to go through our electric vehicle section of Big Ideas 2023. And electric vehicles have really defied the skeptics with the exponential growth they've seen. If you went back, to 2015, the consensus view was that electric vehicles were going to be a niche part of the ecosystem. Maybe they'd sell a few 100,000 units globally, but really battery costs were not going to decline enough where they'd really take share.
This is not only true, but extremely important. There's a reason I relentlessly roast the so-called experts, including Wall Street analysts who have no idea what they're talking about, and supposed industry experts making forecasts about adoption of EVs and all kinds of other things as well. You see, the thing with credibility and respect is they must be earned and retained. Sam's right. Go back just a few years, less than a decade ago, and look at what the experts were predicting in terms of EV adoption. It's utterly embarrassing. So far off the mark, it defies belief. Yet they continue to make the exact same errors. I've been doing my best to make it absolutely clear how wrong these so-called forecasts have been and continue to be. And the reason is so I can cash in a decade's time on credibility. As I tweeted recently, if you don't think for yourself, someone is bound to do it for you. And this appears to be the same mistake that every legacy automotive manufacturer has made over the last 15 years. Rather than thinking for themselves, they've outsourced their thinking to so-called experts who had no idea what they were talking about. Looked at their projections. Only a few 100,000 EVs will be sold per year in the future. Who cares? No point making those. So they didn't. And now, as a result, almost every single legacy automotive manufacturer on Earth will be bankrupt before the decade ends. And I really want to stress, nothing's changed. These dimwits still have no idea what's happening with EV adoption, the rate of change, the precipitously declining costs, including batteries, but also to produce the entire vehicle itself. I get secondhand embarrassment when I read reports, research from the likes of Moron Stanley, who still today think Tesla at best will be doing about 6 or so million electric vehicles per year in 2030. Last I recall, they were only expecting something like 30% of new vehicles sold in the US in 2030 to be electric. The margin of error on these expert predictions, including Wall Street analysts publishing their research, and so-called industry experts forecasting EV adoption, is stunning. There are still automotive manufacturers today who genuinely believe that they'll be selling ICE vehicles beyond 2030, some beyond 2035. They're in for a rude, financially catastrophic awakening.
But now the conversation has shifted to, is this rapid growth going to be linear growth or exponential? And we believe it will be exponential. And this is largely based on Wright's law. And so that's for every cumulative doubling of production, you get a fixed percent cost decline. And that's really driving a huge shift in demand for electric vehicles. So we believe that electric vehicles are going to increase sales more than sevenfold, or a 50% annual rate from 7.8 million units in 2022.
Well, this is awkward. Moments ago, I was roasting the so-called experts for being embarrassingly wrong with their EV adoption predictions, all massively underestimating how quickly EV adoption would take place. I too would like to roast myself for being a moron and massively underestimating EV adoption. Most of you guys and girls will know, over on Patreon, there's optional access to my Tesla valuation model. In that, I have a load of assumptions, but there's many things that I don't include in the valuation model. dozens and dozens of different spreadsheets, things that I've modeled out, mapped out, and considered just privately to stress test my assumptions, including EV adoption. My EV adoption estimates remain unchanged. I first did this exercise sometime in 2020. I've never shared these estimates publicly, although, if you're interested, I'm going to post those exclusively to my Twitter subscribers in the coming days. But just to point out how dumb I am, less dumb than the experts, but still really fucking dumb, let me pull this up right now. I was anticipating, remember, these assumptions are unchanged since 2020, so we're a couple of years later, but only 2 years after I made these assumptions, my estimate for EV adoption in 2023 was exactly 7,806,385 electric vehicles sold in the entire year, as in this year, as in the year that we're still currently in, as in it hasn't happened yet. We just heard 7.8 million electric vehicles were sold in 2022. I estimated in 2020 that it wouldn't be until 2023 that this many sold. Do you understand that margin of error, how dumb I am? My estimates for 2030 are going to be way off, obviously. More time, massive increase in the margin of error. But for me to be that wrong, I'm a year off, only a couple of years ago. I'm embarrassed, but I'll own it. I too am a moron who massively underestimated EV adoption rates. Yeah, you know, the deluded Tesla fanboy who thinks, yeah, that guy underestimated EV adoption. I'm an idiot, but at least I'm not as dumb as the so-called experts. Now remember, if you guys and girls would like to see my assumptions for EV adoption rates out over the next decade, I'm going to post these exclusively to my Twitter subscribers. It'll be a great way for you guys and girls to dig this up every year and point out, hey moron, you were wrong again and again and again. Let's see how far off the mark. I'm not going to change these, so full disclosure. I'm not going to fiddle with the numbers. I'm going to post them as is, my 2020 estimates. We'll see how well they age. Probably not well, but the really embarrassing thing is, this is the deluded, overly optimistic guy himself massively underestimating EV adoption. I mean, I still can't believe. There's a really big margin of error to miss by an entire year just a few years ago. Now, to be fair, I did also model out a hyper bull case for EV adoption, as in this is absurdly unlikely, but hey, if everything goes right, maybe this will happen. And this is even more awkward. Let's refer to my estimate. My hyper bull case estimate for EV adoption, again, this is from back in 2020. In 2022, in my hyper case, as in extremely unlikely, but in theory, if literally everything that could possibly go right does go right, I had in 2022, the year just passed, 7,307,685 electric vehicles sold. Still underestimated in my absurd hyper bull case. So again, I'm a moron. I underestimated EV adoption, and I'm the extremely overly optimistic idiot who's deluded. Just saying.
To roughly 60 million units in 2027. And one of the biggest downside risks to our forecast are supply constraints, though we think the market is signaling, price signaling for those to be resolved, but also whether or not traditional automakers can successfully transition quickly enough.
Very important point. Same constraints in my own estimates. Again, if you want to see those, I've just posted them exclusively to my Twitter subscribers. The constraint will not be demand. It will be supply. Tesla's moving as fast as they can. Unfortunately, they're not themselves going to be scaled to 80 million units of capacity by the end of the decade. If they could do that, guess what? They'd sell all their production and they'd be about the only automotive manufacturer left on the planet. Not going to happen. The point I'm getting at here, this is very, very big and could be a major variable in terms of the number of electric vehicles sold every year throughout the rest of the decade. If you build them, they will sell. If you do not build them, they cannot sell. This could be a big issue. The world's legacy automotive manufacturers today have had their heads buried in the fucking sand, are years behind, and are now scrambling to start ramping up their own EV production. If they can't get the batteries, the materials, if they can't build the factories, if they can't get the engineers, they can't make the vehicles and they cannot sell them. This is going to be the determining factor. I'm adamant, if today 80 million electric vehicles were being built at scale, they'd all sell. They'd be the entire automotive market today. Now people go, oh, what are you talking about, bro? People don't understand EVs, you need to advertise. Think about this. The more EVs on roads, the more people, neighbours, friends, family, colleagues, etc. who you see when you own a nice vehicle go, oh, that's an electric vehicle. I thought that was shit. Let me talk to my neighbour. Hey neighbour, tell me about your electric vehicle. Next minute, the neighbour explains, safer, cheaper, better. You should buy one. Of course, other people argue, Stephen, they're too expensive. And I would argue, think first, talk second. Economies of scale, costs coming down. By the time global production reaches around 80 million vehicles per year, costs will have plummeted. There'll be major innovations, there'll be economies of scale. You guys understand this whole spiel, right? There's a lot of moving pieces here, so don't be that person with small brain syndrome who looks at the world today, doesn't think at all, and think of what would be involved in selling more and more EVs over time, building more at scale, costs coming down, more people learning about the benefits and so on. Just wanted to emphasize, this is a very big point. It could make a massive difference. We're talking tens upon tens of millions of electric vehicles per year, either way, depending on whether or not they can actually get built. And that's going to come down to supply and production capacity. Those are the two bottlenecks. It's not demand, it's supply.
And so just to give some context here, electric vehicle sales, even though we're in the early days, have been taking share over the past 5 years. And so, you can say that internal combustion engine vehicle sales really peaked in 2017. And you can see they've come down pretty dramatically. Just 1 year of growth in 2021 with 1.7% increase there. And at the same time, you have electric vehicles that have just been consistently growing extremely strongly. Um, in 2021, over 100%. This past year, over 60%. So, you get the stage set there with the backdrop of this declining sales base of gas-powered vehicles and this accelerating pace for electric vehicles.
You'll be hard-pressed to find an expert out there, other than the folks who I would not use the term expert to describe because I kind of view the term expert to be derogatory, just facts. Folks like Tony Seba, this guy's been on the money. But I don't think you'll find any so-called experts who will have been predicting that ICE vehicle sales had peaked back in 2017, about half a decade ago. Was that in your bingo card? Probably not. People still don't seem to understand that this has already happened. Still today, people are magically expecting that ICE vehicle sales are going to rebound. Oh, it's just the supply chain challenges. That's why our sales are down the last couple of years. We just can't get the chips. Bullshit. No one's buying your vehicles. You're hiding behind the supply chain challenges due to the scamdemic lockdowns as an excuse. I don't know when legacy automotive manufacturers will actually disclose to their investors what they already know, but mark my f***ing words. Mark ARK's words. ICE vehicle sales have already peaked. They're currently in freefall. That freefall will accelerate. ICE vehicle sales are collapsing. They will never again be close to the same number. It's down from here.
And one of the big questions out there is, are people going to invest? You need to invest in manufacturing. You need to invest in battery plants, in, raw material development, all of these things. And in just the past 4 years, we've seen a real transformation in the amount of investment money going towards EVs and batteries. So if you look in 2018, there was roughly $100 billion of investment planned over the next 10 years for electrification. That's increased tenfold. So as of 2022, there's $1.2 trillion earmarked over the next 10 years for electric vehicle and battery investment. And roughly half of that is for electric vehicles themselves. And so what does this convert to when it comes to annual EV production capacity? So the historical auto industry capital efficiency is roughly $14,000 per unit capacity, which means that if you took $600 billion and you converted that all into factories at that efficiency rate, you'd be able to produce roughly 43 million units annually. But what we're seeing is that electric vehicles are actually more capital efficient and roughly twice as capital efficient. So just $7,000 per unit capacity, which means that $600 billion earmarked for electric vehicles would accommodate 86 million units, which is close to all of auto production. So you have the backdrop, and now you've got the financial backdrop. The investment dollars are there; they're being committed. So really, what do we have standing in the way between us and an all-electric future? It's making the vehicles that are actually priced in the right way, and this comes down to that battery cost. And why is the battery so important? It's the single largest cost component of an electric vehicle. So getting those prices down are what make these vehicles affordable and compelling to consumers. And so this dives into Wright's Law, which is really at the crux of all of our electric vehicle modeling and all of our cost decline work. And so Wright's Law, as I stated earlier, states that for every cumulative doubling of production, here measured by kilowatt hours, you get a fixed percent cost decline. And for batteries, that's 28%.
Did you hear that? some numbers that will help us to predict the declining costs of electric vehicles. Now, we're going to have to use a proxy. We can't quite use kilowatt hours, so please don't be a Poindexter. Just trying to illustrate the point here. Instead of kilowatt hours, we'll use number of electric vehicles as a proxy. It'll be good enough. So, if for every cumulative doubling in EV production, our proxy, there's a 28% decline in the battery costs, we have two questions to ask. How many cumulative doublings in production until EVs are 100% of the new vehicle market? And at that point in time, how much will battery costs have declined? Last year, 7.7 million electric vehicles were sold. Let's double it and see what happens. Boom, 15.4. Let's double it again. Boom, 30.8 million. Let's double it again. 61 million. Still not the entire automotive market, but that's 3 doublings. Now what happens if we cut the cost to produce the batteries down by 28% 3 times in a row? This may sound a little boring, but it's really important and probably an exercise that literally no automotive manufacturer, at least no legacy automotive manufacturer, has taken the time to do. Awkward. We're going to start with the number 100. We're going to use that as the cost of a battery today. We're going to multiply that by 0.72, a 28% decline once. We're going to do that again, and we're going to do that one more time. Well, isn't that interesting? In theory, the cost to produce a battery in electric vehicles, once EVs are give or take, let's say about 80% of the new vehicle market, should be approximately 1/3 the current cost. And in case you're unaware, today, the cost of a battery in an electric vehicle is the most expensive thing in the vehicle, and it's no fucking contest. Many thousands of dollars. If you'd like to do a little bit more homework, aka some thinking, kind of important, especially if you own Tesla stock, go find out how much a typical battery in an electric vehicle today costs per kilowatt hour, and then knock that down to 37% of its current cost. Then pick your jaw up from the floor and consider the implications. This, ladies and gentlemen, is the core reason why I continue to bang the drum and point out that ICE vehicle sales are in free fall, and that collapse is going to accelerate. There's nothing in an ICE vehicle for which the costs can decline this much, not even close. But wait, there's more. Remember, it's not just the batteries. The actual vehicle itself, an electric vehicle itself, is very different from an internal combustion engine vehicle. They look similar on the outside, but that's where the similarities end. There are so few moving parts in an electric vehicle versus an ICE vehicle, and there's such a new technology being manufactured at scale, that many of these same cost declines will apply to the vehicle itself. It's not just going to be the battery whose cost precipitously and predictably declines over time, but so too the vehicle itself. Now, any hints at what kind of cost declines might be possible in the vehicles themselves, and not just the battery, but the overall vehicle? Well, Tesla's Investor Day, just a few months ago, not even a few months ago, at their Investor Day 2023, Tesla unveiled plans to literally halve the cost to produce a vehicle. And that's their next-gen vehicle platform. Do you guys understand what this means? If not, let me spell it out. EVs today are about price parity with an ICE vehicle. The cost of ICE vehicles is actually going to go up, not down, throughout the decade. Sales are collapsing, reversing economies of scale. You get the point. At the same time, ICE vehicle costs are going up. EV costs are going to be declining dramatically. There comes a point where consumers, even the really f***ing dumb ones, will be looking in the marketplace thinking, you're telling me I can get the electric vehicle, which performs better, accelerates faster, is safer, has a lower risk of rollover because of the battery in the bottom, is much safer in a crash because there's no engine in the front, there's much more crumple zone, and it's better for the environment, and there's over-the-air updates, and it costs a lot less to own and operate, and it's $10,000 cheaper than an equivalent ICE vehicle? You're telling me that I can buy an electric vehicle that's literally better on everything that matters, including safety, performance, and features and functionality, and it's going to be $10,000, $15,000 cheaper than an ICE vehicle with comparable features? Am I a moron? Let me think here. Sometimes, but not usually, no. So if I'm not a moron, would I pay $10,000 more for a worse product? Let me think about that. No, I wouldn't. Therefore, I'm not going to. You understand this is going to happen, and this is happening a lot faster than anyone, including myself, expects. I just really don't think people are getting this. They don't like thinking. They just reason by analogy. There's no way EV costs could come down that much, bro. What are you talking about? Time will tell.
And what we're seeing in the battery space is actually something pretty interesting. So there's really two big camps of battery chemistries out there. You have nickel and you have lithium iron phosphate. And for a while, everything was shifting towards nickel because it was higher energy density. So more energy per unit of mass. And people were doing this because the electric vehicle drivetrain systems were not that efficient. And so you needed more energy to get an acceptable range. But as the rest of the drivetrain and the power electronics have become more efficient, we're actually able to shift to less energy dense cells, these lithium iron phosphate cells, which are cheaper as well. And so these cells are declining at the same rate, same Wright's law curve, but they're starting at a cheaper price point, and there's been fewer of them cumulatively produced, which means if we look at this chart on the right, you can reach a cumulative doubling faster, which should lead to accelerated cost declines. And so this is really big, and it's driving a lot of these cost declines that we're seeing in vehicles today. Another common question when it comes to electric vehicles is, it takes too long to charge. How long will it take to charge? Are charging rates getting better? Well, Wright's law also captures this and successfully models where the future is going. And so you can see that, as of today, the best vehicle out there is charging 200 miles in 15 minutes. So already I would argue that that's a pretty compelling offering. But if this trend continues, you could get to 2027 where you'd be able to charge 200 miles in 4 minutes.
This too is extremely important and core to the EV adoption thesis. Moments ago I was discussing people who seem to think that everything's frozen in time and nothing's going to change in terms of EVs. EVs take too long to charge. It's true. EVs take way too long to charge today to be extremely convenient, although most people are actually charging while they're asleep by plugging their vehicle in at home in their garage, so it's rarely an issue, except on road trips. But even so, this too is something that people who've taken the time to do some thinking and look at the data and project into the future will understand. Everything about EVs is going to get better, faster, cheaper over time. That includes the performance of the vehicles, the range of the vehicles, the time it takes to charge the vehicles, how much the vehicles cost to purchase. This really matters, and is also being ignored by almost everyone. Anyone heard any legacy automotive CEOs point out how long it takes to charge electric vehicles? That's part of the reason why they're not just producing electric vehicles. Something to consider.
But I think a bigger point here is that, EV charging is going to continue to get faster, but really this metric is a good proxy for overall performance. And the reason for that is that it captures the efficiency, the range, the power capabilities of the vehicle, and how that tracks over time. And what we're seeing is that at a certain point, it doesn't matter if your car charges in, 7 minutes or 6 minutes, but you'll start to optimize for different things. So maybe then instead of investing in incremental faster charging, you start investing more in the autonomous driving capability, the safety features, or the entertainment. So this chart, though it's capturing EV charging rate, it really speaks to the performance metrics of the vehicle overall. And in 2022, we hit a pretty profound point that has often been talked about in lore. They say in lore. Sorry, they say price parity. What is price parity? That's when you have an electric vehicle that costs the exact same amount as a like for like gas powered vehicle. And this happened in 2022.
Ah yes, the magic phrase, price parity. You guys and girls, if you're a long-term viewer of this channel, all the way back to 2019, may recall me using this exact phrase about, 420 quintillion times, trying to point out it's a big tipping point we're approaching, fast it'll be the next few years. Well, guess what? It just happened, bitches. Of course, I'm sure that's nothing. It's not like they're already at price parity and they're way cheaper to own and operate. And, oh wait, no, that's exactly the case. Another very important part of the EV adoption thesis. Not everybody knows that EVs are at price parity. And even less people know they're much cheaper to own and operate. But that's okay, because the more of these things that sell, the more of these things end up in driveways of neighbours, friends, family and colleagues. Next minute, your ill-informed neighbour says, hey, aren't these things really expensive? Hey, why'd you buy an EV? How can you afford that? As we continue through this video, just remember, a few key critically important things need to and needed to happen. Costs come down, production goes up, the pieces of the puzzle are starting to fit together.
So you can see that the least expensive EV with more than 300 miles of range was actually below the average new transaction price for a vehicle in the US. So we hit price parity. And the interesting thing here is that with cost declines for electric vehicles, those costs should continue to come down. So you can see here the forecast future Tesla model, which they've spoken about, And that's at half the cost of what they're producing today. And so you kind of see a repeat of the cycle that we saw in 2017. Before 2015, there were no EVs with more than 300-mile range. And then the Model 3 comes out in 2017, and it's this, it's more than halving the cost. Uh, and now they're going to more than halve the cost again in 2023 and beyond. And on the right, you kind of see how Tesla really leads the pack here. And so Tesla had the vehicle with more than 300 miles of range. And it took until 2021 for another company to come out with a vehicle of equal range. And then you see in 2022, you get a whole host of other companies who have entered the scene here.
That chart should be named sarcastically, "The competition is coming" in about another 5 or 6 years. Just hang in there. Kind of embarrassing. Tesla had the first 300-mile range electric vehicle. It took more than half a decade for any other company in the United States to release another electric vehicle that had comparable range. Half a decade. That was the competition coming all over themselves, not for Tesla. Of course, suddenly it's 2023. Everything's changed, right? Now they'll be able to catch up. Yeah, you just have to press the catch up to Tesla button and immediately you'll be caught up because that's how it works.
And now there are more in 2023 as well. But what we would expect is that, similar to what happened in 2017 with the Tesla Model 3, what Tesla comes out with in the future at half the cost could leave a similar time lag for these other companies to catch up and offer something compelling.
Riddle me this. If it turns out this is the case, and it literally takes half a decade or more for Tesla's so-called competition to release something that can compete on price and performance with Tesla's next generation vehicle, the details of which were unveiled at Investor Day 2023. Not the pretty picture that everybody wanted, but actually how they're going to make it for half price, the thing that matters. If Tesla has a run over the next half decade as EV adoption is soaring, recent surveys suggesting around half of all people in the US are buying an EV next, or at least thinking about it. And by the way, you know what's going to happen when that poll's run again in 6 months and 12 months? It's going to keep going up until it's literally 100% of people, give or take, thinking about buying an EV next, who ultimately will. If that's the case, and Tesla's aggressively ramping up their production, if they have a half-decade run, give or take, where no other company can sell a vehicle for a similar price point with similar performance unless they want to lose $20,000 a pop, which is a great way to go bankrupt, what do you think might happen to the companies hoping to sell electric vehicles to consumers? Will people be buying their electric vehicles? Will they be able to sell those vehicles and make any money at all? Or will they have to sustain financially catastrophic losses on every vehicle sold to try to compete on price and ultimately end up going bankrupt anyway? I definitely don't know the answer to that question, which is why I'm asking you. So please let me know in the comments below. Are legacy automotive manufacturers going to be okay?
And so, EV growth has been strong, but we really think that we're at this inflection point and that these battery cost declines are going to continue to drive exponential growth in electric vehicle sales. And so what you see on this chart is this darker blue line is the global revenue share of all autos by MSRP. And the lighter blue line is global EV market share by average MSRP. And you can see that they track very closely. So, as EV prices come down, there's a larger addressable market. And if you hit that price point, then people are, very compelled to switch over to electric vehicles. With that Wright's Law cost decline, we think that in 2027, you're going to have a compelling electric vehicle at, potentially the roughly $20,000 price point, which means that there is going to be a huge jump in demand for electric vehicles.
Excuse me, where's your demand analysis? Just because they're cheaper and better, a lot cheaper and a lot better, how do you know that people will buy them? I need to see a demand analysis.
And, you can see we really are at this price inflection point where you really start to see the elasticity of demand for vehicles. And this gets into the question that we started with. Is the growth for electric vehicles going to be linear, or is it going to be exponential? And this chart on the left shows kind of the scene in 2017. And what you had was a consensus forecast that was linear in trajectory and suggested that in 2022, there'd be roughly 2 million electric vehicles sold globally. The reality was that there was, closer to 8 million electric vehicles sold globally.
I mean, that's actually not too bad. The experts were only off by 6. Oh, wait, hang on. Oh, no, that wasn't vehicles. That was millions of vehicles. Oh, they were only off by about a factor of 4. It's not like they'd make the same mistake again, though. Surely they've learned from their mistake, right?
So much more exponential than linear. And then if we look at the chart on the right, the same thing is happening again today. The consensus forecast for electric vehicles in 2027 is a linear extrapolation of the past few years and suggests roughly, 20 to 22 million electric vehicles sold globally.
What's that? Oh, okay. Breaking news, ladies and gentlemen. On screen now, we have some exclusive footage of the lead expert behind these forecasts, which are definitely going to be right on the money, because they've learned from their prior mistakes of extrapolating linear growth on an obviously exponential trend.
Our forecast is much more exponential, and we think that's going to be closer to the 60 million unit mark. And so, this is very different. Historically, it has grown, more exponential than linear, but still consensus is looking on this linear path.
The biggest flaw with ARK Invest, obviously, they're far too polite. How gently Sam is pointing out the obvious idiocy of these morons.
Well, the experts keep forecasting linear growth even though historically it's been exponential and all the data and evidence suggest that it's going to continue to be exponential, but they're still projecting a linear increase.
They're all dumb motherfuckers. They're all embarrassingly wrong. There's no excuse for being this dumb, this wrong for this long. It's inexcusable. People rely on these so-called expert projections from different organizations out there. Automotive manufacturers have relied on these, and again, going back to the earlier point in this video, if you don't think for yourself, someone else is bound to do it for you. Never wise. This is exactly what's happening. I wouldn't be criticizing these so-called experts if people weren't reliant upon their expert opinions. But people are. People are making investment decisions. Not just stock investors, but businesses are making investment decisions based on their expert predictions as well. The margin of error from these clowns is just embarrassing. ARK Invest unwilling to directly call a spade, but you know what they're thinking. These dumb motherfuckers still haven't learned.
Another factor at play here is what will happen to internal combustion engines as it becomes clearer and clearer that electric vehicles may be the path forward. So then, do you have a consumer who's delaying a purchase because they see electric vehicle prices maybe in the next couple of years are going to come into their price point?
Yes, and yes. That's exactly what's going to happen. Consumers who were going to buy a new vehicle, an ICE vehicle, start thinking, hang on, these electric vehicles aren't that bad. Maybe I'll put off my purchase for a couple of years. Next minute, they buy an EV. Oh, and then there's the whole people concerned about a recession. Legitimate fears, by the way.
Oh, geez, maybe I shouldn't be buying a new vehicle after all. Shit's hitting the fan. Maybe I'll lose my job. Interest rates are going up. I might put off the delay of purchasing a vehicle.
Some of these consumers may have still intended on buying an ICE vehicle, but by the time they're ready to buy a new vehicle in a few years' time, it'll be obvious that they'd have to be a moron to buy an ICE vehicle. Again, ICE vehicle sales are currently in free fall, and that free fall, that collapse is accelerating. There are a confluence of factors, including recession fears, but also the fact that consumers are putting off purchasing an ICE vehicle now. They're seeing EVs, they're not too bad, maybe wait a little bit, they're pretty expensive, maybe I'll wait a bit. My neighbour's got one, he gave me a drive in his Tesla, it's sick, but I can't afford it, but I'll wait a little bit. Next minute, they buy an EV. I want to be really clear, because again, people just are not getting this. ICE vehicle sales are currently collapsing. This collapse will accelerate.
And so maybe they put off buying a new gas-powered car, or maybe they go to the used car market and they say, I need a car now, so I'll get a used car because it's less expensive. And then, when the electric vehicle comes into my price point, I'm going to shift over. And so what you see on this chart is a large number of those internal combustion engine units at risk as the shift to electric vehicles continues. And then really to sum this all up here, the planned investment levels should support a 7-fold increase in electric vehicle production from the roughly 7.8 million this past year to 60 million electric vehicles in the next 5 years. And again, this is a 50% unit compound annual growth rate. So thank you for joining me on this big idea. our work does suggest these declining battery costs are going to lead to exponential growth for electric vehicles. And that it's going to be fairly easy to track how this is progressing because you can look at those battery costs, and every year you'll be able to see those electric vehicle sales numbers. Thanks for joining us.
So, in summary, ARK Invest obviously have no idea what they're talking about. ICE vehicle sales are not currently in freefall. EV sales are not increasing exponentially, and the so-called experts really are experts, and they're definitely going to be right in their linear projections on what is obviously already exponential growth in EV adoption. Don't worry, everything will be fine. If you make ICE vehicles, you'll still be selling them after 2030, because that's what the experts think. Nothing to worry about here at all. Why not also produce hybrids and maybe even consider producing hydrogen vehicles, because it's not obvious and inevitable that EVs will be 100% of the new vehicle market before you know it. And now, in related matters, I'm unsure exactly when it's going to happen, but surely at some point the adoption rate for Athletic Greens AG1 is going to hit 100% too. Jokes aside, more and more of you skeptics are starting to convert. I continue to get messages day after day. If you'd like to feel and perform your best, then stick around, and if not, that's alright, you can end the video now and go jerk off and play video games. As always, I won't judge you much. I've been taking Athletic Greens AG1 every single day now for more than 2 years, and I've never felt better. It's full of 75 high quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and adaptogens to help you deal with stress. Not to mention digestive enzymes. And if you head to athleticgreens.com/SMR or use the link in the pinned comment, you get a 1 year free supply of vitamin D3 and K2. It's such a simple health habit. 1 scoop, once a day, every day. It's that simple. Most of you will have seen the countless testimonials. I thought I'd share an interesting one that came through last night via Twitter DM. It's a long one, a lot of personal info, so I've scrubbed that out and we'll just focus on the stuff that relates to AG1. On screen now. Regarding AG1, hey brother, don't know why I'm writing you this other than to express my gratitude and to get it out of my head. We'll skip ahead, like I said, there's some personal details in there. This condition always, every day, caused me to crash around lunchtime, after which I would once again be in bed until the following morning. Exhaustion and anxiety was now my enemy. I would disconnect from the world and dissociate with those I love. So given your persistence around AG1 promotion of energy, I decided I have nothing to lose. This is what we call somebody with a brain. As I mentioned previously, this is a bit of an IQ test. There's a 9-day money back guarantee. I mean, at least try it for a month and see how you feel. Don't get the results, you get your money back. So it really is a test. Nothing to lose and potentially a lot to gain. Let's read on. I've just received my 3rd month's supply. I've drank it every day. I have so much energy throughout most of the day. I am productive. Started a new business. Started socializing. Refurbished a boat. Traveled to 6 countries, all in the past couple of months. It's no coincidence. Thank you for your persistence, you're welcome, your integrity, and your insights. I wish you health and happiness, brother, just as you have given those gifts to me and my family. So, not a whole lot more to add here. One of countless examples of people who've tried Athletic Greens AG1, found a meaningful boost in energy and many other benefits as well. So what are you waiting for? Head to athleticgreens.com/SMR or use the link in the pinned comment and start your daily health habit now, and be sure to let me know how you're feeling in a few weeks or months time. Testimonials like that are the reason I continue to bang the drum on Athletic Greens AG1. What do you got to lose? Oh, that's right, literally nothing. And if you'd like to be among the very first subscribers to my exclusive Twitter content, head over to Twitter, my username, @StephenMarkRyan. You can subscribe now, and if you're on an iOS device, it might take a few more days, but you can always subscribe from a desktop. And if you do that, Apple won't be taking the 30% cut. What a joke. So check it out. I look forward to finally having somewhere I can produce content without any concerns whatsoever of being cancelled by the censorship overlords. Love ya.